Hey guys, so the question is, why is day trading so hard for beginners? I have two major reasons why day trading is so hard for people just starting out. So let's get right to it. Number one, the first reason that I believe trading is so hard, period, and definitely hard for beginners, is because there's a lot of bad common trading knowledge in the marketplace. All right, that's what I call it. Bad common trading knowledge. So a lot of times when you're first starting out, I'll tell you, if you're unlucky, if you're unlucky and you run into a lot of bad common trading knowledge, that's going to hinder your, that's going to hinder your progress. Right. My story is when I first started out, I was one of the unlucky ones. I found a lot of bad common trading knowledge. The first strategy that I can kind of remember was like a breakout strategy. All right. And the problem with me is that I had decided that I wasn't going to quit. So when I first got my hands on this first strategy, and maybe it worked the first time, I was hooked, right? And so then I spent probably years trying to make a breakout strategy work, when in the end, breakout strategies are some of the worst strategies you can try to trade with, right? Because how often does a breakout happen, right? The winning percentage on a breakout strategy is pretty low. So I spent a whole bunch of time, whole bunch of effort, unfortunately, a whole bunch of money trying to make a losing strategy work. And that's just something that can happen to a beginner. You take the word of whoever you learned that first strategy from. And if you're like me and had decided, hey, you wasn't going to quit, you wasn't going to give up, you may waste a lot of time with a terrible strategy. All right. And so I don't want that to be the case for you. If you're just starting out, you're just getting into day trading, I want to help you on your journey. So I'm going to give you the answer right now on how to avoid that situation. I'm not going to make you wait to the end of the video. Hey, but if you're feeling what I'm saying so far, please hit that like button for me, right? I really appreciate it. Okay. Here's how you avoid that, right? I don't care what strategy you find. You find it, take 20 trades. All right. Take 20 trades the exact way that the strategy demands. Don't cut no corners. Don't break no rules. Take 20 solid trades. So even if it's a breakout strategy, take 20 breakout strategies the exact way that it's taught to you. Okay. Hey, after you've taken 20 trades, if you're not profitable, scrap it. Right. Hey, if the numbers is going to bear out the truth. If you took 20 the exact right way and it didn't work, scrap that boy. Okay. Now, if you had like mediocre results or made a little profit, okay, now take 40 trades the exact same way as the strategy demands. Now, if you take those 40 trades and you're profitable, maybe you got a system that you can hold on to and try to get better at. If not, scrap that boy. All right. So number one reason why trading is hard is because, first of all, there's a lot of bad common trading knowledge out there. All right. Now, the second reason why trading is hard, and especially for beginners, is that the technical analysis side of trading, that's only step one. Right? There's really two parts to trading. It's getting the right information, it's getting a good strategy, and then it's getting the ability to run that strategy. Because in trading, many times you are your worst enemy. All right. There's a lot of emotions that's going to come into play when you're trading. All right. Trading has to do with money. Okay. And you don't understand your connection to money until you become a trader, or until you try to become a trader. See, because everybody likes to receive money. Correct. You would agree with that, right? Everybody likes to earn money. Right. Hey, everybody likes to be given money. Right. But here's the thing. In that same vein, nobody likes to lose money. Okay. Nobody likes to lose money, and losing money is part of trading. All right. And so until you learn how to understand that losing is part of trading, losing money is going to happen, those are a lot of emotions that come into play with that. Right. And so a lot of times trading is hard for beginners because you lose some money and now you want a revenge trade, right? You haven't dealt with that emotion of, wow, I want to get that money back right now. That takes some learning, Or hey, you was up having a good day, and then took a couple losses, and you look up and you've taken more trades than you're supposed to in a day. That's what we call over trading. All right. That's another thing that you shouldn't do that's truly triggered by emotions. Okay. So people underestimate, especially starting out, the emotional side of the game. All right. And the emotional side of the game is really the game, right? After you have the technical analysis, I mean, you can flip a coin on to say which direction, right? But over trading is killer for new people and old traders. Revenge trading is a killer. You know what I'm saying? These are emotional things that you have to conquer to finally start to make money in the marketplace. And just those two reasons alone is why trading is hard, especially for beginners. I mean, you got to be lucky enough to get some good information right out of the gate. Then you have to be disciplined enough, patient enough to actually work a winning strategy, because you can have a winning strategy and still not work it correctly. And it takes practice. Okay. And so I'm going to throw a third one in here too. That a reason why trading is hard, especially for beginners, because people underestimate how hard trading is. Okay. Trading is a learned skill. I love saying that, you know what I'm saying? Because people don't see it that way. Trading is a learned skill, like being a doctor, like being a lawyer, like being a pro athlete. It's a skill that you can acquire. It's learned. It takes practice. It takes maybe months or years, just like any other major profession that pays well, right? Trading pays well, but it's a skill that you have to develop, okay? And so the third reason that people struggle is because they underestimate that fact. They underestimate the fact that trading is a skill, and it's going to take time. It's going to take practice. And the reason people underestimate it is because people online make it look easy, right? That's just the bottom line. I can show you a whole bunch of trades, winning trades, right? And I can show you a winning trade and then say like, yeah, that's easy. Just do that. And you think like, oh, I can do that. I should have been trading years ago, right? Unfortunately, trading isn't that easy, right? I can make it look easy. I can make it look easy for good reasons, for bad reasons, right? There's people out there who make it look easy and they know, it's not that easy. I'm telling you right now, it's not easy, okay? It may appear to be easy for me because I've been doing it for 16 years, right? But that's why I like to show losing trades and winning trades, because, hey, you're not going to win every day, right? And when you're in that loser, how are you going to react? That's what's going to determine how much money you can make, right? At the end of the day, you could be your worst enemy or your best friend. You have to conquer self in trading, because there ain't nobody over your shoulder telling you don't take that trade, right? There ain't nobody over your shoulder saying, hey, you've already taken too many trades for the day, right? You have to have self-discipline, self-management, and risk management to make it in this game, all right? So I said 2 reasons why trading is hard. Threw an extra one in there for you, right? But listen, it doesn't have to be that way, right? If you can get the right information right information from the beginning, find a strategy, test it out properly, back test it, some people will call it, but test that strategy out, see if it's worth even going with. If it is, all right, keep it. Then practice, and learn yourself. You're going to have to learn yourself. You're going to have to learn your triggers. You're going to have to learn what you do well, what you do bad. The things that you do bad, you're going to have to eliminate them, all right? And that's going to take time, right? So just give yourself time and do what most people don't do. Get on a demo account and trade that sucker, grow that sucker until you prove to yourself, I can do this. I can really do this. All right. So that's why trading is hard. But the answers is to get a good strategy, test it out, prove it. Okay. Get a proven strategy, and then practice so you can learn yourself, learn your emotions, and build up your trading skill set. All right. So, hey, I hope you guys enjoyed this one. This is a great time to like, share, and subscribe. All right. Now we're going to do what I call work study lesson, where we're just going to go out here. We're going to watch me take some trades so you can see kind of my strategy, what I do, how I go about it. I use Fibonacci price action. All right. You may have never heard that term before. I use Fibonacci price action, and that's how I find high probability trades every day. All right. So let's get into it. Right. Let's go over to some charts. All right. So let's see what's going on out here. First, we're in the binary option market today. And I want to look at the real pairs right out the gate. And Euro USD is 92% right now. That's lovely. But fortunately, it's not showing me much. This boy has already happened. Check this out. Now, like I was saying before, I use Fibonacci price action. So let me grab a fib and show you it's kind of what I'm talking about here. If I put a Fibonacci retracement tool on this beautiful downtrend, I know it's a downtrend because I also use the 21 EMA so I can see the direction of the market. All right, so this is a clear downtrend. So before I even drop this, do you think this thing retraced 50%? Do you think it pulled back 50%? Let's see. Boom, 50%. It came back 50%, stopped right in the center and continued the downtrend. That's what I'm looking for. That's kind of the setup. This is my entry area. When I can find prices right in the 50% 618, what I call the sweet spot, we got something. All right, so this one we missed. Well, we didn't miss it, but you know, you guys understand what I'm saying. That's what I'm looking for though. That situation right there, man, where you can find it. That's the start. That's step one for me. Then I'm looking for a price action entry. So hopefully we'll get to see that today. This is just a beautiful trend. Off to the races. Nothing there. Nothing there. And nothing there. Okay, so the real pairs really don't have anything to offer me this morning. Hold on, let me look over here. Your audience 92%. Let's check this out. I was about to say we missed it, but no, this is a big range. So just so you know, when the EMA looks like a roller coaster, you're in a range, right? So you sell at the tops, you buy at the bottoms when you're in that situation. All right, Euro Yen is 92%. Let's see what we got here. Oh yeah, this one's just off to the races. All right, so now I'm gonna go over to OTC pairs as a secondary situation. You know, when I can't find anything on the real pairs, then I'll go to OTC. So let's see what we got here. All right, now this American Express is not there yet, but it's heading there. So this is what I would do in this case. And this is where trading gets boring, but also that's what it's supposed to be. So what you do here is we got the fib on. Look at this beautiful downtrend, right? We're expecting a 50% retracement, and then we expect that trend to continue. So we wait. So what I do is I mark up what I call the sweet spot. Let's put it right here. Put it right here. All right, now we wait, right? So we wait for prices to get into our entry zone. Then we'll look for a price action setup. And if we get it, we have a trade. Boom. Let's keep looking. But let's remember that American Express is going to be ready to go soon. Tesla. Oh, we may be there right now. Let's check this Tesla out. We may be there right now. That looks about like we're in the 618 zone, I would guess. We are in the 618. So this kind of overshot. So there's a problem. We want it to kind of pause at 618. We don't want it to get deep into it like this. This could really be a sign of a reversal now, because we would have wanted it to stop actually where it made this. See this hammer right here? I would have went. I probably would have lost this one. Well, I know I would have lost it because 1, 2, 3. So yeah, but it went into the 618. So now it's coming back in strong. I mean, if this candle was to come all the way down, all the way, didn't quite make it. Close but no cigar. So this one, you probably got to be careful. Probably skip it. Because hey, it broke out of the entry zone. All right, let's go see what American Express is doing. All right, still coming. Twitter. here's a case of that. This Twitter is looking like a reversal because, see, it should have bounced somewhere probably around in here, and it's still falling. So, got to be careful of those. And that's the great part about, Fibonacci. You don't have to take it. If it breaks out, scratch it. Citigroup is coming. It may take a while. Facebook doesn't have anything going on right now. Let's see what else we got here. Apple. We're going to find at least one trade today. We're going to find one. Boeing, Facebook, Intel, Johnson & Johnson, Microsoft. This is a beautiful drop. Let's put a fib on it just to see. I go from the top of the drop started down to the bottom. Go time, I'm gonna go. We're a little late. We're a little late on this. We gotta try to get a trade in today. So let me show you something. We came back in on the 618. That's what I liked about this thing. Okay. So we shot out, but it came right back, closed back in the 618 level. We call that the golden ratio. It's a level where prices tend to turn a lot. So we turned right at the golden ratio. Okay, let me check that American Express too. Almost there. Almost there. Oops, I didn't. That's Microsoft. Go back to Microsoft. Let me start so I don't have to. I can get back to it quicker. And that American Express is about to trigger. All right, so we're into our entry zone. Okay, so now we need a price action setup. So we need some type of price action setup as the trigger. If I go back to Microsoft, I need to put it in a better spot. Price action setup would have been this from this low here. And it's tough, but it's a push up first entry. Push up, second entry short. If we put a name on that trade, it was second entry short. But again, we were late. So this may not work out, If we had entered here, we'd be 1, 2, 3. This would be the final candle. And we'd be real low. So we really need a home run here. I really entered this trade late, but I wanted to take a trade for you guys. So we're gonna need a home run here, and we might not get it, but we'll be able to see if we would have won. Even at this, if we'd have went here, we'd be able to tell. Okay, it looked like it would have been a winner. 10 seconds to hold on, and that boy would have been a winner. Let's see. Right. There you go. So if we had it entered when we were supposed to here, we would have had a winner. Now, since we entered late, which is why it's not good to enter late, we got to hold on. We got 19 seconds and this thing is going, ooh. We need some rejection here. Rejection. We got 10 seconds to hold on. 5, 4, 3, 2, 1. We got it. Oh, American Express. We got it. But again, that's why you want to enter when you're supposed to. All right. I entered a little late on that just because I was trying to get a trade for you guys. But we enter on this candle, then that's a much more comfortable victory. All right. American Express. Let's see if we're going to get something. All right. We got into our entry zone. Prices are stalling. We're coming back out. We're a mile away from EMA. Let's go. All right. So the reason I'm taking this one is because the EMA, all right, some of you may not know about the EMA, is that many times it acts as a magnet, right? I love the best entries are on off or around the 21 EMA. You're going to hear me say that a lot. But also when you get a long way away from the EMA, a lot of times it acts as a magnet because it's a what? It's a moving average. So prices have to come back to the EMA, just as a tip for you. So we'll see. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. We're a mile away from the EMA. We're praying at this point that it acts as a magnet and pulls us back to price. Not pull us back, but pull us back to the EMA. And we're in our, we were in our entry zone. This is a huge downtrend here, very big, very strong. So we're hoping that it's going to continue. At this point, the continuation will start here. All right, first candle, we're up. It's always a good thing, right? First candle, we're up, always a good thing. We got to see. We really need this thing to attempt to make it back to that EMA. But this is how the Fibonacci helps you. I mean, the Fibonacci zones just help you have an entry zone, because there's a lot of places where you can enter on a price chart, right? So you have to make a decision. A lot of people are just looking for every price movement to jump in. I'm awake. If it's not in my sweet spot, hey. And then I want a price action entry. This is another second entry short, but sometimes you can take it without getting a price action entry. It's better if you have one, but you can take it if you don't get one. Okay. All right. So prices is doing exactly what we expect in this case. We were a mile away from the EMA. So we were hoping that it was going to pull back to the average price, and it did so. So now we got to hold on. We got 50 seconds to hold on. If you don't know, first time watching me, what I like to do, I take a max of 5 trades, and I've broken that rule recently. So I got to get back on my discipline. Got to get back, take a max of 5 trades, but I'm trying to get 2 net wins. All right. So we're 33 seconds away from getting 2 net wins today. And wait a minute. 25 seconds away, and it's trying to come get us. All right. We need a little rejection there. Because I don't want to have to look for another trade. I love 2-0 days. Just be done with it. Come in, get 2 wins, be out. So, all right, we got to hold on here. They're trying to get us. We got a countdown here. 5, 4, 3, 2, 1. Say it with me.
Easy money.
So that's the lesson for today. I trade Fibonacci price action. It's something that you can learn, something that you can pick up. It's a skill that you can get and get better at. And 2-0 days is very possible. And the thing I love about Fibonacci price action, it works in any market. I do this in the Forex, I do this in futures, I do this in binary options. All right. So if you want to learn more, check out the links in the description. All right. And hey, that's going to wrap it up for this one. I hope you enjoyed it. So, hey, the 2 reasons why trading is hard is because, hey, all the bad common trading knowledge out here. And secondly, you got to get the experience. All right. You got to handle your emotions. You got to practice. You got to grow your skill set. Don't just think trading is easy. It's not easy, but it's possible. All right. When you have the right information. All right. So that's going to do it for me today. I hope you enjoyed it. My name is JD. And as always, I wish you increase on the sudden. Bye-bye. If you want to learn more good trading knowledge, check this video out right here.